it comes to audit and assurance, it's an introductory level paper for advanced audit and assurance in level 3, meaning that your ability to be able to understand well what is here will make your journey much easier and very, very easier when you are in level 3 doing the advanced audit and assurance. So it's very important to understand. Now, among other things, the entire syllabus for the advanced audit and assurance is divided into 5 sections. 5 sections. So did I say 5? No, more than 5. 2, 4, 6, 8, 9 sections. So we're going to be looking at the nature of audit and assurance. We will consider the issue in relation to international standards on auditing. We will look at the regulatory environment of auditing. Four, we will consider accepting and managing engagement. 5, we will look at the issue about planning and engagement. 6, we'll look at engagement evidence. 7, we will consider audit review. 8, concluding and reporting. And then lastly, we will consider internal audits. So these are the 9 things we'll be talking about throughout the syllabus. For concentration-wise, this is just 5% of the syllabus. This is 10% of the syllabus. This is 10%, 10%. Planning and engagement is 15. Audit evidence, 20%. Audit review, 10, 10, 10. So these are the things. So realize that the nature of audit and assurance is a minor area, just 5%. International standards on auditing, 10%. Regulatory environment of auditing, 10%. How do we accept and manage the audit? So what are the factors do we take into consideration before accepting an audit engagement? Planning is very critical because before you start anything, you must what? Plan about the audit. So how do we plan the audit? How do we do risk assessment? How do we find out whether this company is a good fit for us? We're going to be looking at that. But most importantly, at the end of the day, because you are going to be issuing an auditor's report, you must gather what we call audit evidence. So the way we gather audit evidence is also something critical that we'll be considering, and that is 20%. So the syllabus grading gives a guide on the focus and what we have to look at there in that session. Then at the end of the day, when we end our audit, we must review the audit to ensure that everything we've done is well. Then we must conclude and report on the audit. Then certainly, in addition to considering all of these, we must look at how internally the organization itself can undertake its audit assignments. So these are the 9 things that we'll be discussing in the course of the 17 weeks that we have before us to the examination and find out what we can do in relation to that. Now, to start off, I'm going to give you something I call Introduction to Audit and Assurance. And in that Introduction to Audit and Assurance that I'll be discussing with you, that we'll be discussing possibly today and then next week, we'll really cover almost everything that we'll be doing in the audit. So after that introduction, we will come then and pick some things one after the other and focus on them. So let's look at Introduction to Audit and Assurance. Now, to look at audit and assurance and start with the introduction, there are 5 W's and 1 H that we need to consider. In other words, there are 6 questions we will answer if we want to understand what audit and assurance is. So, we will have what is auditing, why do we audit, when do we audit, who does the audit, where the auditor expresses his opinion, and then how the auditor carries out the audit. So these are the 5 W's and 1 H that we'll be focusing on and looking at as we are looking at the issue about introduction to audit and assurance. So let's begin with the first one. What is auditing? What is audit and assurance? What would you say?
A review of financial reports.
Review of financial reports. Okay. Okay. When you say, okay, review of financial report, okay, I'll take that. Review of financial reports. Okay. But then the question is, in addition to that, why do we review the financial statement? So why? Why would we review the financial statements?
To have an assurance that the report given to the intended user is correct.
The intended user is correct or represents a true and fair view of the entity. That is the key word. Now, this is what happens when it comes to organizations usually. So this diagram is going to represent what's really happening in organizations. So we have shareholders on one side, and they appoint board of directors. The shareholders are the owners of the business. The board of directors are responsible, so the company is here to manage the business. So they are responsible for the day-to-day management of the business. But at the end of the day, they must be accountable to the shareholders. How do they show their accountability? They show their accountability by the preparation and presentation of what? Financial statements. For this reason, we say the board of directors or management are responsible for the preparation of financial statements. So they prepare the financial statements, and that financial statement is sent to the shareholders. So the shareholders use the financial statement to measure performance of the company and make various decisions. But when shareholders are presented with a financial statement, they want to find out, is this really what is happening in the company? So it's just like you are buying a dress. You go somewhere, you are buying a dress or something like that. Now you wear the dress, stand before the mirror, you look at it yourself, you see that it's good on you. But sometimes you don't trust yourself much, so you ask somebody, how does it look? So when someone else tells you that it is good, then you are confident to what? Buy the dress and go ahead. I hope you've experienced that before. Now, the same thing happens to companies. It is not that shareholders don't trust management. Rather, shareholders want to just be sure that management is actually doing their work well, and most importantly, that the financial statement prepared represents a true and fair view of the entity or of the company. So for them to have that assurance, that confirmation, they now appoint the auditors. So they now appoint the auditors so that the auditors will add some level of credibility to the financial statement. So the auditors are there in order to independently examine the financial statement. So they add credibility to the financial statement by independently examining the financial statement. That is how the issue about auditing comes to be. So this diagram here actually represents everything. However, it is not only shareholders that can appoint auditors. There are various other people that can appoint auditors. Management can appoint auditors. Regulatory bodies can appoint auditors, as we saw in the banking sector last year. Bank of Ghana appointing auditors for some of the financial institutions. So regulatory bodies can also appoint auditors. Just that the objectives of the appointer is going to be different based on what they want to look at. So when a regulatory body appoints an auditor for the firm, they are finding out to check whether the firm is complying with what? Regulatory requirements. When a shareholder employs an auditor, they want to find out whether financial statement presented to them represent a true and fair view of the entity. Now, the Commissioner General of the Ghana Revenue Authority can also appoint an auditor to audit the financial statement of the company if they realize that the tax filed by the company is faulty or contains some fraud or errors. So there are different people who can appoint auditors, but there are different objectives for them. In addition to the financial statements, not only are auditors going to be auditing